Hello, everybody, and welcome to the MakerDAO Scientific Governance and Risk Meeting, number 123, I believe we're on now, taking place on Thursday, January 7th, at 1700 UTC, slightly later time now. This is the first meeting of the year. I hope everyone enjoyed themselves in their time off. My name is Long for Wisdom. I'm the governance facilitator for MakerDAO. I'll be, I guess, running the meeting, moderating the meeting. We've got an agenda as usual, which I'll kind of go through briefly before we start. But I just want to say before that, so I know we've definitely got a couple of new people here today. Feel free to interrupt or comment if you have things to say. We love to hear from people. If it becomes a problem, someone will let you know. So please do err on the side of speaking if you have something to say. Cool. All right, so going over our agenda, we've got some weekly updates from the main domains and groups, a couple of regular updates. We've got the MIPS submission review, and then we've got a couple of segments. We're going to have a couple of people talking about, so we're going to pretty much talking about risk in the bull market. Nick's going to bring up a concern around flap auctions and the surplus buffer. I'm hoping Sam or Hexnot will give us an update on the PSM usage. To start with, though, I think we'll dive into governance. So I'll give a brief update on stuff that's already happened this week since we got back. On Monday, I think it was Monday, we saw that the ETH debt ceiling got hit, along with the USDC debt ceiling got hit. As a result of that, myself, Sam, and Seb worked on a executive proposal to increase those ceilings, just to avoid us delaying too much, given the bull market. So that went up, I believe it was Monday. Someone correct me if I'm wrong. And that passed, which is good. And we saw the ceilings updates early this morning, I think. So normally we have me going through governance at a glance as well. Today, though, we're going to have pros go through it, and possibly in the future as well. Pros is a new member. I'm assuming most people have seen him around, but if not, Pros, feel free to introduce yourself and kick it off.
Yeah, absolutely. Thanks for letting me do this. Yeah, I'm Pros 11, both on the forums and Rocket Chat. Pretty new member, but really diving in and loving the maker community. So threw together the old governance at a glance, and we'll walk through that, I guess. So kind of 3-point summary for the MKR holders is, PSM is live, and we did see some pretty big activity using it this week. So that did result in some DAI price fluctuations, but we were still looking at like between 0.997 and $1.009 on the peg. So really good stuff there. And I expect as we expand it, we'll be looking even better. Meanwhile, DAI supply hit a new all-time high. When I wrote it, it was at 1.34 billion. Now it's even higher. So people are really using the extra room in the ETH vaults there for sure. Also, MKR kind of mooned this week, which was super exciting, peaking well past 1,000. I think it kind of peaked out around 1,250. So pretty exciting for those MKR holders out there. On the forums, we've got a bunch of cool stuff going on. Seb Ventures posted a poll about the mission or the vision of MakerDAO, kind of following up on a brainstorming post he had made earlier, asking the community to weigh in on where they think we should be focused here in 2021. We got a cool post about a maker stability module, an idea for basically allowing for more yield for MKR holders through the maker platform. That came to us via Ratchet 5000. Very neat. Continue to talk a lot about stable coins as well. So we got post about USDT and kind of some regulatory hurdles they'll be facing next week via Blue Cat. So check that out if you haven't. And as unsurprisingly, seeing as he'll be updating us on this call, Exonaut's post on the road to the PSM has seen some increased traffic now that we've implemented it and even went through our first DC raising. There were a few signal requests as well I wanted to draw everyone's attention to. One of them I'll actually toss to Exonaut at the end here to give a little more detail, but I'll run through the other four first. First one came from Ultra Shupi. We got a adjust the surplus buffer signal request for currently sitting at 4 million, asking if we would like to raise that. Next, we got a signal again from Ultra Shupi with the ETH-B line. So looking at that IAM ceiling, that's the one we can adjust ourselves. So kind of setting the highest level and seeing if we'd like to raise that since ETH-B is maxed out again. Seb Ventures also brought us a signal request on managing TUSD exposure. Had a lot of talk about that with them changing hands in the forum and kind of what we'd like our response to be. So go give your opinion there if you haven't already. And the other one was for adjusting the kind of DAI-ETH liquidity token vault. We already hit the DC there, so signal request seeing if we'd like to raise it. And then, like I said, I did want to toss it over to Hexanaut to explain his signal request for the interim DAO operating budget, as that's new and exciting and just went live yesterday. So if you're out there, Sam, and want to take it away, go ahead.
Thanks, Pros. So yeah, basically, for those who don't know, we've been sort of building out the autonomous MakerDAO operation to sort of move away from the foundation as the sole provider for building stuff and operating the Maker protocol. So for the most part, the foundation has been covering this through the grants program, but there's increasingly costs being associated with things that the foundation can't be involved with. Specifically, the PSM is the main example of that. So we've been racking up costs that need to be covered. And so that, along with sort of, we do need to eventually move to the DAO funding things in general. We figured that a sort of next step for that is to get an initial budget. So we're proposing 100K DAI as an initial budget to go into a multi-sig that is controlled by all the mandated facilitators. So the signal request, that'll be up for 2 weeks. And the plan is to put that to a governance vote at the beginning of February, because at that time we will know who all the facilitators are. There are currently 3 going through the monthly governance cycle. So yeah, so this will go forward if we can get at least 3 facilitators signed on, and we can kind of get started with moving away from the foundation more.
Yeah, just to clarify one thing there, Sam, to be clear, the key holders would be those mandated actors that aren't in the foundation, correct?
Yes, it's everybody I listed in the thread. So it's not all facilitators, but it's the ones in the thread. You can read it for yourself.
Awesome, very cool. Yeah, so my first time doing the governance at a glance, so go to the forums if you got any feedback, comments, anything, but that's pretty much it from my end. Thanks for letting me do the shout outs.
Yep, thank you very much, Pros. That was awesome. Cool. I guess let's move on. There was one last thing I wanted to say on the governance front, which is that there are probably going to be a number of polls on Monday. I think possibly like 9 or 10. So look out for those next Monday. This is a couple of signals, the inclusion polls for January, and a couple of others. There's quite a lot of Oracle stuff as well. All right, I think that covers governance for the time being. Smart contracts. Chris, do you want to give us an update?
Sure. Hey everybody, Happy New Year. Also, welcome pros. That's great, and brings a tear to my eye to watch the DAO like growing up, starting to stand on its own. So it's very, very exciting time. Usually, yeah, I go over last week's stuff, but I guess I'll go over last year's things. So the very last sets of executives, maybe, and also this past Monday we did the. So let's say go back to December 1st. So in December on the 18th, we passed the Uni v2 DIF and Aave collateral types. We adjusted some rates and we whitelisted the Gnosis or Gnosis in general into the oracles. And then the community passed the PSM for USDC-A on the 20th, or at least that's when the executive went live. And we did DC changes for FA USDC-A and the PSM USDC-A on the 4th of this week. As for everything else, there's pretty much no other reports from last year. So I think we're just going to talk about where we're headed. So in the coming week, we should hopefully get MIP 21 and Covan either this Friday or early next week, depending on how things go. So that's for those of you that need a refresher, the real world assets for I guess 6S, and that'll happen. I guess as a real exec, we should be expecting that next Friday. So that's exciting because that'll be the first sort of real world asset use case on the platform. We're still looking at the DSS exec lib changes. We're hoping to make those updates before we get like really ramped up on collateral onboarding because it'll radically simplify collateral onboarding. And we have some domain team work that still needs to be reviewed. MIP 14, which I guess is the DAI protocol transfer. We should probably get on that one pretty soon just to make sure it's sound, since it sounds like you guys might be using that to fund some action. And then MIP 17, MIP 25 and MIP 30 still need updates. So that's the actually, sorry, MIP 17 was the that was the debt ceiling. I think we're good because we went with the DC instant access module. So really, we need to look at the Flashmint and the farmable CUSD adapter, the crop join. And then I had some additional notes that I just kind of wanted to intro with. So the end of last year was really aggressive. A lot of people got pretty burnt out. And over the sort of tail end of last year, because of various other market opportunities, our community lost some smart contract engineers as well as the foundation. So we're hoping to kind of pace ourselves a little bit better. We're down to, kind of bare bones on expertise for the system. And so we're hoping that we could basically sort of rate limit until we get some more people trained up to around 4 collateral additions a month and 1 MIP a month. And then we're hoping to take one of those weeks and make it a community week. So that would be anytime like changes might need to be made to the PSM. In fact, actually any changes at all really, but we would slide anything the foundation can't touch into that week. And also the community would sort of run its own executive. And meanwhile, we'd be able to work a little bit more on that tooling and trying to like get stuff a little bit more efficient. So that's our sort of hope and expectation for this coming year until we can ramp up on more people. And I had a few things I wanted to bring up. There was a sort of discussion yesterday as the MKR price is going up. Long just sort of was kind of thinking, hey, should we have our eyes on governance attacks? And that got me thinking about exactly, what a governance attack could do. And we have a governance attack vector that would not be great, which is anyone that took control of governance right now could instantaneously turn on liquidations for stablecoins. And we think that it would, there's no need to do that. We don't need to have those things instantaneously accessible. We know that stablecoins don't have liquidations on. We don't plan on turning them on. There's very little reason to have them come on in a hot emergency. And so I think that what we should do is remove all of the stablecoin vaults from the instant access module for being able to turn liquidations on and off. And if we do that, that'll reduce the attack surface basically of governance attack. And so I'll try and make like a forums post about that just to sort of throw it out there, but I think you could expect that in the coming weeks, executive. So we'll likely do that then. With regards to the PSM, I just wanted to make like a general comment. I think Sam is working on a UI for the PSM to make it more accessible to everybody. But you know, if the PSM were still under, you know, or were something that was under the control of the foundation, we would still sort of have a product manager that was sort of pushing this forward, because really what's happened is we've added the PSM and it's at the sort of database layer. And so it needs kind of documentation so that people know how to integrate with it. It needs a UI so that it's more accessible to people. You know, if we were to end up doing this, the community should think about not just the fact that we got the PSM out there, but think about the sort of chain of everything that still needs to happen. There's other stable coins that would need to be added to it. And the old stable coins would probably need to be liquidated into it. So there's still a lot of work there. I'm like super proud that the community was able to sort of have that autonomy and do their own thing, but remember there's still a lot of work to do. And so if anyone really wants to take the lead on sort of pushing that stuff forward, I'm just giving you some general ideas of how we would have done it in the foundation. So if we were in control of something like that. And then I think we can probably talk about this later, but because you guys are going to bring up, like I think Nick was going to talk about flap auctions and whatnot, but I've got a couple comments to make on the flap auctions and risk and also the flip auctions. And so I'm going to defer and we'll do the other domain updates and I'll come back to those when we're talking about those topics.
Yeah, I think that makes sense. Thank you, Chris. That was awesome. All right, what do we have next? Oracles. Nick, do you want to give us a quick update?
Yeah, cool. So at the tail end of last year, right, we onboarded the DAI ETH Uniswap LP token. The debt ceiling for that, you know, the 3 mil debt ceiling that we had set fairly conservatively, right, because we were not entirely confident, right, in the security of the contract, right, because it was brand new. The debt ceiling for that got filled up extremely quickly, right? So that kind of validated our thesis that there is a lot of demand for leveraging up on LP yields. So I think given that we've proven that LP tokens should be a core focus of collateral onboarding going forward, and that there is a lot of potential for stability fee generation there, especially on the risk front as well. It means that you can have like LP pairs against stablecoins, which are less volatile than ETH, right? So they're almost by definition less riskier than ETH from a price perspective. But also it means that the system doesn't have to hold all those stable coins as well, right? We kind of hold them through Uniswap, right? So the kind of blacklisting risk is a little bit lower there as well. So basically there was a forum thread over the holidays, right? Saying, hey, you know, the debt ceiling's full, let's raise the debt ceiling. I kind of disagree with that, but not for exactly why you might think. I think the fact that we've gotten through the holidays unscathed on that oracle is a sign that we can increase our confidence slightly, but it's not a ringing endorsement, right? So what we need to do is we need to get a formal audit, you know, from a really reputable auditing firm, you know, not something like Stamp or something, like something really good, like a trail of bits, you know, an EY, a PWC, or a DAP hub or something. So until we have that, I don't really feel comfortable starting to, you know, raise the debt ceilings, you know, large amounts, right? It looks like there was one to raise the debt ceiling of DAI ETH to 10 mil. That seemed to be the polling option that was getting the most traction, or maybe it was 12. I think it was 10. But instead, what I want to suggest is that you know, we optimize for this this medium-term picture, right? Where as soon as we get the audit back and everything checks out, right, then we can crank up the dial on these. And what we don't want to be is in a position where, okay, after we got the audit back, now we need to go and onboard all these LP tokens. It would be really great to keep the debt ceilings depressed for now, but just start onboarding more of the LP tokens. So then when the audits come back, right, we just crank up the dial and, you know, we're in a really great spot. So that being said, there's already a polling vote that passed to onboard USDC ETH. So that will be coming up in an executive on the, I believe, the 22nd. So not, yeah, so not this coming Friday, but the one after that. And in the interim, there will also be a polling vote for wrapped BTC ETH. So potentially we could be onboarding both of those LP tokens on the executive on the 22nd. So, and those would be the three largest Uniswap token pools from the last time I checked. Maybe it's changed a little bit. And kind of what's cool about this is, right, where do we kind of go from here? Well, you know, we get SushiSwap LP tokens for free. And I don't know if you guys have been keeping track, but the liquidity in SushiSwap is starting to get enormous. And since SushiSwap and Uniswap are just the same contracts, right, we get those for free, right, without having to make any changes. So we can start looking at SushiSwap LP tokens. We can start looking at the Curve LP tokens. We can start looking at Balancer LP tokens. Maybe even 1-inch ones if they start keeping serious volume after their 1-inch farming stuff expires. Okay, so that's on the LP token side. So that looks like everything is trending in the right direction like we expected. So that's good. The other thing I kind of wanted to bring up was the issue we're having with surplus auctions.
Sorry, Nick, can I just interrupt you there? I think we'll maybe get to that point later in the meeting.
Oh, okay,
we've
sure.
done the other updates.
No problem then. So then in terms of governance updates, we have 10 whitelisting proposals that are going to go up next week. So there are 5 for Gnosis and 5 for SEP protocol. So those are both, you know, feeds in our Oracle network, and you know, they're dog fooding, you know, practice what you preach. So that's really good to see.
So a quick governance note on that. We're probably going to bundle those polls for the Oracle whitelisting proposals for Gnosis and SEP protocol, just because I don't think there's going to be a lot of contention around them. I think it can make some sense to just whitelist the groups together. So whitelist all the Gnosis ones and all the SEP protocol ones. So we're going to do that, and hopefully no one's going to complain. Cool.
Yeah, and I mean, there's also like 17 pending Oracle whitelisting proposals from DYDX for basically creating Starkware L2 oracles for them for their upcoming release. You know, so if you add those two together, right, that's 27, you know, total pending Oracle requests. So I think we're finally starting to hit our stride with respect to the oracles as a business that the DAO owns, right, and can earn revenue from in the future. So I think that's all really really exciting.
If I can jump in here quick, I did come onto the forums and kind of pump the brakes myself a little bit on the LP Oracle debt ceiling raise. I do want to mention that we did some additional testing on the smart contract side this week, and a lot of our concerns are assuaged. But I do want to second Nick's desire for an audit there. But as far as adding new tokens, let's go ahead and do that. The other thing is, I think somebody else will probably mention our current surplus buffer. If we were to raise that surplus buffer, I don't think we would have a problem necessarily raising the debt ceilings on the LP tokens to be, just short of that. I think that's kind of our limiter on 3 million right now, is we've got a 4 million DAI surplus buffer. So raising the one would allow us to more comfortably raise the other. Just throwing that out there.
Yeah, thank you, Brian and Nick. Nick, can I ask if there's been any progress with the centrifuge Oracle report for which one is now NS drop, I think it is.
I just started it this week, so I've been very clear that we were really busy up to the tail end of last year, and that it would be my first priority coming back. So I've been working on that and should be out probably before the end of next week.
Okay, great. Thank you very much. All right, Risk, Primož, do you want to give us an update?
Yep. So in regards to collateral valuations last year or the last few weeks, our two external analysts, Jarno and Andrei, they finished the BTC evaluation during the holidays. And it actually may happen that this would be the first collateral that we might give a red light to onboarding it. I won't go into full details now what was the reason, but there are all sorts of problems with liquidity and outstanding amount of TBTC. And the evaluation showed that we would probably onboard it with less than 1 million debt ceiling. So we said we might reevaluate it later when metrics improve and onboarding afterwards. So this evaluation should be online soon, and you can read about it. Another one that we promised and we are still doing is the one on CUSDC crop join, so MIP 30. So the risk assessment. But when we came to a point to actually study the risk parameters or propose them, Compound just recently released this new patch that lets governance more actively decide how comp rewards will be distributed for particular markets. And this actually makes our job a bit harder, because when we decide on stability fee for CUSDC, this would be normally a function of farming yield. But because of this new implementation by Compound, farming yield could be adjusted by their governance instantly. And we would need to react before them by potentially setting a different stability fee. So that is why we're still figuring out, how with this work in practice, if there are any hidden risks, and we'll release details about it in the report. Another thing, Money Supply from our team should make a post soon, a signal thread about potentially increasing dust amount again. The recent increase in each price also increased gas costs significantly, and this presents a problem, of course, during volatile events when people want to deleverage and the costs are just too high. And there's additional problem if you have liquidations, the keepers might just not bid on these small vaults. The current value is at 5. The current dust value is at 500 DAI. But yeah, unfortunately, we may need to increase it. So stay tuned for this signal and please vote. Another thing that our new member Andy has been working on over the past weeks, I'm actually really excited about this, is refreshing our maker portfolio value at risk model. We haven't updated that one for some time in last months, but that was mostly because we were recently more focused on measuring expected loss for individual vaults. And this actually helps us define risk premium, and which we later use in the rate setting group. But now when maker depth exposure is growing really fast, we may want to have more clear picture on the tail losses for the overall maker portfolio. In other words, we want to measure portfolio value at risk properly, which means we need to include correlation metrics and to measure worst case events and so on. And why I think this is great is because it should also help us more properly define surplus buffer, or help us mitigate risk in any different ways if we see that our exposure is becoming too risky. So I think Andy will be able to show some numbers soon. And I think this will be also beneficial, especially now because we have this surplus buffer topic and talking about risk mitigation during this bull run. And then lastly, yesterday, Rates Group released rates proposal. So please check that report and please provide feedback. Just a short sum up of the report. We're proposing rate increase for both ETH vaults and a slight decrease for Bitcoin vault. And then a few rate decreases for vaults where either liquidity metrics improved or depth exposure decreased. The decisions are mostly based on competitive and market environment. Rates went up in CeFi and DeFi, but of course we also take into account risk metrics and of course the recently increased usage of ETH vaults. And then we have a real-world side of risk, and I'll simply let Sebastian to give an update here. But before that, if somebody has any questions, please ask.
Okay, so I will take it from here. So on the real-world asset side, we made some due diligence progress on new silver and consult right. Basically checking that the legal documents are similar to what we have discussed with both asset originators. We still don't have a legal team on Maker, so we are checking the document, but we are not lawyers, so it will be worth what it will be worth. So maybe Marvin will be able to help on that. I will have to check with Amy. For success, we are waiting on the contract. I'm quite sure Matthew is quite busy setting up the infrastructure in the real world. And we are already working on some new collaterals, or at least doing the first pass on new collaterals that are people's, which were discussion, a community called yesterday, Arbor Trade and Fortunify. And lastly, we are again working on some documentation to make some concepts more easy to understand, because sometimes it was a bit experimental. And if you have some questions, I will be happy to answer them.
I don't know a question, but I'd say I'd love to see some more documentation that helps explain some of the concepts you guys are dealing with, because it's not an area of expertise for me.
Yeah, it's quite complicated, and we are trying to build the concept from the ground up and try to make something generalized that can work for any real-world asset. So it's a bit complicated.
Cool. All right, anyone else have any questions? Seems like not. Okay, let's move on to community development and operational support. Amy?
Hey, everybody. So 2021, no doubt, is a big year for the DAO operationally. This quarter, in terms of operational support, we've already seen a brand new pace of activity and the community taking action towards like a truly self-sustaining DAO. I think a big point that I wanted to highlight was around, I know there's discussion around increasing the surplus buffer for DAO expenses, and I'll kind of summarize a little bit of the activity that's been happening in the forum already, and why, just to support that statement of increasing. So first we have kind of the interim funding that Sam has proposed, as well as there is a technical MIP for the KEG to do actual payouts as well that Sam is working on. And then with Sam's interim funding, he did mention a multi-sig, and that process, a non-technical MIP, will be coming soon from pros. And then Seb did actually also submit recently a team specifically real-world assets funding experiment that I would also encourage people to see. And it kind of highlights what it would look like to be funding a team and what some of the expectations might be. So all this is kind of happening now while kind of a more formal domain team funding structure is coming. And one main point that I would love to highlight is Juan is in formal submission for his operational support facilitator. And I would highly encourage to vote on that when the time comes, as he's been instrumental in terms of kind of supporting a lot of what's happening in the operational side. And then for community development, in the break, I've been thinking a lot about how information moves and kind of surfaces in our community. And a big piece of that outcome is I've been working with Anna, who does our snippets, and David from our community in rolling out kind of a master resource list of projects and teams in the Maker community. There's a lot. It took quite a while. It's like over 60, I believe, to collect. And I think this will just kind of give an overview of everything that has been happening, everything that is still happening, including working groups and things like that. And one of the things I would also encourage is what we're thinking about is how we make this useful, but also maintainable. So one of the things I always see often in projects like this is people tend to not update it. So we actually don't know the status. So we're working on making it simple and where anyone could kind of contribute to it. So that's it for us. Any questions? Happy to take.
I have a quick question about the kind of the distribution of the budgets to like different teams and like the evolution of that at Maker. I know back in October, Long posted a thread called Flapper Distributor that kind of proposed a mechanism for doing that. And I know Seb also posted a MIP proposal for something called the Strategic Reserves Fund. And now this week we saw kind of a temporary multi-sig happening. I was curious specifically about the Flapper distributor, if there's any plan to actually formalize the spec and bring it into a MIP and kind of solidify the whole vision for distributing funds from the surplus buffer to more specialized instruments.
So I can speak to that. The Flapper distributor is the KEG. So the KEG is meant to be the implementation for the description of the Flapper distributor. Yeah, so if that was unclear.
Okay, got it. Yeah, that makes a lot of sense. Thank you.
Yeah, no problem.
I think we had the KEG developed separately, and it's like was almost the same as the distributor, and it was fairly easy to kind of combine the functionality, I think, right? Or sort of anyway.
So is the KEG the KEG is documented where exactly? Is it in its own MIP or is it part of? Yeah, I'm just curious where I could read more about it.
Yeah, so the KEG, yeah, KEG started as a hackathon project in the foundation a while back, and yeah, so I guess we can find that code, but maybe Sam knows more. He's working on the MIP right now.
Okay.
Yeah, so Lucas and myself have been working on that since the hackathon project. It's since been sort of adjusted to include the Flapper distributor. So the KEG itself has kind of two pieces of functionality. It does streaming payments both from the Flapper as well as just sort of fixed rate amounts that can come out of the surplus buffer. So it's kind of just a general purpose tool we can use to pull funding for whatever.
Got it. Super exciting. Yeah, thanks for the update.
Oh yeah, and with the MIP, I'm working on the MIP for that.
Nice.
Perfect. You done there, Amy? Sorry. Yeah, you were. Right.
Yeah.
Yeah. Cool. Cool. All right. Juan, do you want to give us some updates on the calls you've been organizing of late?
Yeah, sure. So yesterday we had a call, first one of the year with real world assets. So we had People's Company. It's quite interesting about mainly farming. You can check it out. It's already on YouTube while Pablo works on the notes, which should be up soon. Next week we'll have the XDAI team. So Igor and Andrew from the XDAI team will be here explaining a bit more how it works and discussing their application for stake. And as a special guest, we'll have Patricio from POP, the proof of attendance protocol, that will be explaining how they migrated to XDAI, different advantages of L2, etc. So we'll see how that goes. So that's regarding the cost. And I wanted to echo a bit on what Chris has been saying about the burnout. I think it's a bit also about managing expectations, right? So with different partners and different projects that want to interact with Maker. So we need to realize how much effort is being put by the smart contract teams, Risk and Oracles mainly, to get these things done, evaluated, and making sure that everything is safe. So it's about communicating a bit better the effort that this takes and making sure that we don't disappoint anyone, right? So again, if we manage to communicate better all the effort and the well, everything that's required from our side, so it's not just a plug and play. We can make sure that no one is disappointed at the end, and that we can grow at a pace that we're comfortable with. So those were my 2 cents. I don't know if there are any questions. I guess not. And Amy and Nick and Primoz covered pretty much everything.
Great. Yeah, thank you, Juan.
Thanks.
Yeah, I'd echo what Juan said again about the burnout and the managing expectations. We're like, I feel like we're very close to kind of like expanding capacity, but yeah, we're just not quite there yet, I don't think. All right, let's have our MIPS updates. David, I believe you're doing this week.
Yeah, I have the pleasure of doing this week. I actually prepared a few slides to make it a little bit easier to follow along.
Yep.
So if you don't mind, can you make me a co-host so I could share my screen?
Yep, just done so. Go ahead.
Sweet. All right, give me a second here. Okay, cool. Should be popping up. Let me hit the present button. All right, cool. So weekly MIPS update. First of all, happy New Year to everybody. And I guess I should introduce myself. My name is David Utrobin. I'm one of the community development leads at the Maker Foundation, and I'm also a MIP editor in training. So I've been working with Charles and over the last couple months and getting my feet wet with MIPS. And so with this new year, we are entering our very first governance cycle, the January governance cycle, and this first week is dedicated to formal submissions. So formal submission, I think, officially closes tomorrow on Friday, but I'm glad to announce that all of the MIP and sub-proposal authors that said they would formally submit their MIPs have already done so. And just to give a reminder, after a MIP or sub-proposal is formally submitted and the governance facilitator does the submission review, inclusion polls happen the following Monday. So that's actually going to be this coming Monday, January 11th. You will be able to, as an MKR holder, vote whether these should be included in the governance poll and the executive vote, which is a bundled version of all of these MIPs and sub-proposals. So let me quickly just list through the different submissions. So we have MIP 29, the PEG stability module. We actually already have an implementation of the PEG stability module. So this MIP just formalizes and votes in the actual spec. We have MIP 30, which is by Lev. It's a farmable CUSDC adapter. It basically creates a USDC vault type that takes advantage of the comp farming reward, which makes it a lot more comfortable to use as collateral and has a number of different advantages. There's also the MIP 13 component 3 subproposal 7, which is a declaration of intent. And if you don't know what those are, that's kind of just getting a preliminary like yes or no from Maker governance as to whether they are in support of whatever is being proposed. So this one is for a governance communications domain team. It has a drafted mandate inside of the declaration of intent, and basically it says, hey, Maker governance is interested in forming such a team. 4 more, so there are 7 total. 4 more, so these are all sub-proposals. The MIP13 C3 SP81 is for the Maker protocol cover with Nexus Mutual. This is really interesting. It basically is also a declaration of intent that says Maker governance wishes to engage Nexus Mutual to provide cover for the Maker protocol, and all of the details about what that involves is there inside of the inside of that subproposal. So check it out if you're interested. And the very last 3 are all onboarding onboarding proposals. So I'm really excited about these. There's one for Juan for the operational support domain. There's one for Sebastian Deriveau for the risk team as a risk team domain facilitator. And there's one for Sam McPherson as a smart contracts team domain facilitator. And yeah, enough praise can't be shared with these really, really awesome community members. Sam, Sebastian, and Juan have been really making significant contributions to Maker over the last 6 months to a year. And I'm very happy to have them in the community, and I hope you all share my enthusiasm about them. But nevertheless, you will be able to officially vote them in or oppose their voting in. So yeah. That's it for the formal submissions. There's a number of proposals in RFC, which one of them is MIP26. This is the governance contract redesign. It is actually past the 3-month RFC phase, but it's going to continue on because it is a pretty complex MIP, and it is, being continued to work on by the smart contracts team and others. So feel free to continue to comment on it. MIP31 is an active reserve AMM proposal, which is basically a proposal to create like a MKR DAI pair that lives inside of the Maker protocol. I think it is what it is. That was my understanding of it. It's a very novel and interesting idea. Feel free to read up on it. MIP32, which is actually also submitted by the same author as MIP31, a forum member by the name of Alexis, is the PEG stability module for compound mixed exposure. And this provides an extension for the PSM that also allows PSM, and by extension the Maker protocol, to leverage the USDC in compound lending to get that yield, and so that the USDC that's sitting in the PEG stability module isn't just idle. So it would also produce an extra stream of revenue for the protocol. And then there's a sub-proposal for onboarding a new collateral type backed by B protocol. This is a declaration of intent, but nevertheless, yeah, all of these are in the RFC phase. I'm kind of going through everything here, so I'm not reading the chat. I'm gonna read it and open it up for questions after, if anybody has any. There is one MIP that was recently placed into the conception phase. Sorry about my doorbell. MIP31, which is the Maker Stability Price Module. This is also submitted by Alexis, and the brief description is that it allows governance to defend a specified MKR price by pre-allocating DAI to buy at a predefined level. So yeah, definitely go and discuss. And then even besides, formally like in conception and RFC and formally submitted MIPs, there's also some ongoing discussions for pre-MIP ideas. And so I'm not going to read through all of them, but here they are. So feel free to check it out. And yeah, we already got some collateral onboarding updates, but the basic review is that PAX-G, 6S, and the Uni USDC ETH LP token are all awaiting executives, while the WBTC ETH Uni LP token is awaiting a governance poll. And if anybody in the community wants a casual update on collateral status, there is a really great public Excel sheet that I linked here in the slide, and that's also actually really easily found in the forums. So if you ever want an update on collateral, feel free to look at that sheet. And then the last update is the community greenlight polls for this month. So MIP6 applications have been filed for Wrapped Filecoin, P1 Drop, Stake, ST ETH, and those couple of Uni LP tokens. So this the community greenlight polls go up on January 18th, I believe. which is the third Monday of this month. And yeah, that's about it for my update. And again, Happy New Year. I'm really excited to see what the Maker protocol and the Maker community are going to be cooking up this year. Yeah, back to you, Long. Or actually, I guess if anybody has any questions, feel free to ask. I see on the previous slide, wasn't there a MIP 31 active reserve AMM? Yeah, that was in the proposals in RFC. I could link it here for you. But if you have a more specific question about it, feel free to ask. I'll happily follow up in chat.
All right. Thank you very much, David. That was great.
No problem.
We're getting to the point where our updates for the meeting take up most of the meeting, which is perhaps not great. But I'll quickly run through our MIP submission review, which is essentially just where I go through all the formally submitted proposals and confirm that they will be continuing to inclusion polls. And I can confirm that all the 7 David mentioned will be continuing to the inclusion polls next week. All right. Okay, so with our kind of scheduled stuff out of the way, let's get to our kind of more freeform discussion. So I have you down, Sam, to give a brief overview of the update of the PSM usage, or an update on the PSM usage, which I realized I didn't talk to you about beforehand, but I'm sure you don't mind.
No, it's fine. I can run over it. So yeah, the PSM went live at the end of December, passed the first community executive vote, so that was exciting. We went live with a 3 million debt ceiling, and the LERP module was deployed, which lowered the toll in, or the TIN parameter, from 1% down to 0.1% over the course of a week. It seemed to work correctly because there was some competitive behavior for sniping those arbitrage positions towards the end, and the debt ceiling seemed to get filled almost immediately. So yep, everything went according to plan, and so we decided to increase the debt ceiling on the PSM just a few days ago to continue to expand and move towards the 500 million target debt ceiling. In addition to that, I had a meeting with QuantStamp. They're sort of finishing up and finalizing their report. We went over some of the issues and stuff, and yeah, basically we're just going to have a sort of, formalizing, finishing up of the report, but everything looks good according to them. Yeah, so as the PSM scales up, we're actually starting to see some more interesting activity on it, even just today. Mostly I was expecting it to be used for arbitrage so far, but it appears actually somebody is, or maybe multiple people are using it just to trade at this point. I wasn't really expecting that at this stage because there's no interface, but yeah, there you go. So it seems like there may be some demand for swapping between stable coins. So in that regard, I am working with some people to put together a UI that we can throw up so people can more easily access this. The UI, we should be able to produce something similar to Curve, where you can kind of go between all the various stable coins. We just have USDC and DAI right now, but once we get the other stable coins on, we could have it sort of just basically act as trading between stable coins at a no slippage sort of situation and fixed fees. So that's pretty cool. In addition to that, I've been working on PSM Flipper so that we can liquidate the USDC vaults and the others into the PSM at some point in the near future. So it's looking good. Any questions?
Yes, Sam, what is the plan? How do you want to, what are the next steps to increase the debt ceiling? Are we waiting on an audit? Are we waiting on something else?
Yeah, so the plan is to wait for the finalized audit. It doesn't appear they're going to be, they have no things that they need to review on their end. So they're basically just going to be formalizing the existing report, I believe they're running over a couple more things. And then, yeah, they'll have their final report out. And, you know, once we get a week or so in, I think we can just continue to keep raising it bit by bit.
Awesome.
Okay, cool. All right, with all that out of the way, let's move on to some of the discussions we've put off. Chris and Nick, you both said you had things you wanted to talk about. I think Primosh might have some more things to say as well. But yeah, any of you, feel free to chime in.
Nick, I'll yield to you. You should start.
Okay. So it came to my attention the other day that we're starting to see zero bids on flap auctions. So flap auctions are the right when the fees and the stability fees and the surplus buffer, right, in kind of lots of 10K die, right, get auctioned off for maker, and then that maker is burned. So the emergence of a zero bidder kind of just points to the environment that we're in. They've probably noticed that maybe there's not as many participants in the auctions anymore, right? With rising gas prices, right? They think they might be able to snipe one of these things. So it's not a good situation to be in. And quite frankly, until we get liquidations out the door, not just for collateral auctions like we're originally planning, but also for things like the surplus auctions and the dilution auctions. In this particular case, right, we're focusing on the surplus ones. It's heavily points to me like we should be raising the surplus buffer. I think there's other good reasons to raise the surplus buffer. I know there was a signal request thread where this was talked about this week, and there were several other arguments on the table, right? One is that, you know, given the current die supply and given that we're stretching debt ceilings longer than we may be otherwise comfortable with, right, because of the bull run, that the current, you know, kind of insurance buffer of 4 million that we have, right, that's not enough, right? The other argument could be, right, Brian brought up earlier, right, with, well, if we want to add more LP tokens, right, we need to, you know, have a surplus buffer that can kind of cover the potential losses from those, right? The other thing is, right, with the market in a very frothy kind of state, right, I think it made sense earlier, you know, to do lots of burning, right, because Maker was very underpriced in the market. Personally, I still think it is, but it makes, as the price of MKR goes higher, it actually makes less sense to do these burns, right, because you're not burning as much MKR. And then the final reason is, you know, in this transition of, you know, winding down the foundation and handing over all of the responsibilities, you know, to the DAO, and that's really what they are, right? They're not powers, they're responsibilities. You know, there's a lot of costs associated with that maybe the community is kind of unaware of right now, right? I can, you know, speak for mostly just oracles, but so for example, the feeds get paid 1,000 DAI a month, right? And there's 26 feeds, right? So you're looking at, you know, 26,000 DAI a month. That's 300,000 DAI per year that the community is going to have to be taking over. That's not even counting the gas costs for relayers, which is the real significant sum. You know, on a typical day, right, G-Way is what, 20, 30 G-Way. But, you know, you have to take into account G-Way is denominated in ETH, right? A way is 1 times 10 to the minus 18 ETH, right? So as the price of ETH goes up, right, you know, ETH is what, like 3x or 4x, you know, over the past year or something like that, right? So what used to be, you know, 120 G-Way is now 30 G-Way, right? So when you see, you know, 500 G-Way today or 1,000 G-Way today, you know, it's off the charts compared to what we've seen in the past. It got so bad that in December, when everything was pumping like crazy. I mean, it's still pumping like crazy, but there were days where we had 1,000 GWay just to get an Oracle transaction update through, and that cost $200, $200 per price update per Oracle, and we ended up spending $18,000 in gas that day. So that's literally the scales of the order of magnitude of costs that we're kind of working with here. No, not 18K. Yeah, $18,000 worth of gas, right? Now, I think the Oracle gas problem, right, is a bit unique in that we can probably find a way to use some gas futures to hedge those costs, right? But the point that I'm trying to make here is not just to focus on the oracles, but just to say, right, part of the new Oracle domain teams, or sorry, new risk domain teams, or new smart contract domain teams, or your other types of domain teams coming in is, they're going to want to be paid, right? And do we really want to be dependent on the market not dipping and continuing to give us stability fees at the rate that we're seeing? Or do we want to be absolutely sure that we're going to have that money because we have like this big amount of cash just sitting in the surplus buffer, right? So building up the surplus buffer, I think, is just the most logical thing to do here for so many different reasons. So I think one of the options in the poll was to raise it from 4 million to 10 million. And to be honest, that 10 million figure, I think, sounds fairly reasonable.
Yeah, so I'll add on to Nick's thing. I also support adding a bigger surplus buffer for the amount of DAI that we have as a shock absorber. And 10 million does sound reasonable. I'll add for the flap auctions. I've been paying pretty close attention to them, I think, just out of anxiety. In fact, all auctions for a while now. And it seemed like right around an F price of 700, that really clean. There were a couple keepers that would basically drip a bunch of our ilks, and then they would call the flap. It basically became unprofitable for them to do that. There's only a 2% beg on 10,000 DAI, which means there's only a $200 possible dollar profit in there each time they call that. And the drips are really expensive, and I think we've lost that sort of that ability, which was actually a very elegant thing, because it was Maker incentivizing people to call drips, which is something we really need people to do. So so I'm talking with Primosh. I think there could be adjustments either to the lot size or to the beg in flap auctions that will get us back to that. But yeah, until then, spin a keeper up or use the interface that Brian put in the sidebar, and don't let zero auctions go through. And then this is just sort of tangentially related. If we flip over to the flip auctions, I've been looking at those, and there just does not appear to be any profit motive to call byte on these things. The infrastructure to call byte is enormous. If you want to efficiently call byte, if you do it just by using your node's abilities, it's still an extraordinarily large expense to be able to find those auctions, to find those vaults that you can byte. And then there's no guarantee that the person that bytes wins, and those bytes are getting very expensive, not just in infrastructure, but in gas. I think that it's probably time for us to take maybe the fund that Sam was talking about and pay someone to run a keeper on all of the ilks that effectively just calls byte. The Dockerized auction keeper and the auction keeper code has a byte only mode that you can run these things in, and you could just run it so that everyone, so it bytes all the auctions, and then people would bid, and that's less expensive. But I think it's time now, because I don't see how they're being remunerated. In Liquidations 2.0, we've added an incentive into calling byte, so this problem will be solved then. But until we get there, I think that we should heavily consider employing probably 2 people for redundancy to just be calling bytes. So,
yeah, with regards to this sort of the need for altruistic actors to be like calling bite and drip and all this kind of stuff. Over the holiday break, I sort of hacked together a new module called DSS cron, which can be used to basically just pay people to form markets around these otherwise altruistic sort of requirements, so that we can basically just pay people to compete to keep these, like, roughly speaking, their cron jobs kind of going, and sort of keep the whole system running without relying on, you know, employing one or two actors to just with a flat sum to kind of just maintain these. I think it's better to have markets form around these. So that's something that could be used in the medium future, maybe.
Hey guys, can you hear me?
Yep.
Awesome. Okay, yeah, sorry if I don't know what I'm doing. Two things. First of all, I've never sat in on one of these calls before, so I've only very recently started reading the Maker chat, so I don't know anyone here. And secondly, believe it or not, this is my first time in my life using Zoom, so yeah. Anyway, but actually, this is the thing. I actually started following the online chat just in time to see the start of this discussion. And I saw Chris's comment where he outlined what I thought was absolutely, you know, I'm in total agreement what you said, Chris, about the, you know, the importance of the drips in incentivizing the old keepers who used to do them. And yeah, as someone that's kind of also watched for quite a long time, and, you know, been involved with, you know, various auctions myself, just kind of wanted to, you know, share maybe like an angle that some people don't necessarily have about how this situation came about. So, you know, to cut to the point, I agree with you completely that a bigger beg parameter is, you know, essential in my opinion to fix this. But just want to explain why. So I think there can be a bit of a fallacy where people look at historical flaps and they think, well, we've got to 500 or whatever, right? And we've never had a problem with the existing parameters. So why have they appeared now? And I would just point out that there's two very simple things that have changed. One is obvious to everyone. It's, you know, the volatility of the market, how much MKR moves, and, you know, gas prices, etc. The second one that I think is much more subtle is that, you know, obviously the nature of the players changes all the time. There are new bots appearing, they behave differently. And, you know, the bots that have appeared lately, I mean, I don't say this in like a negative way or a critical way, but I think the correct way to describe their behavior is parasitic, is what I would call it, in that they never kick an auction themselves, but they are very happy to take an existing auction for close to zero edge, because of course, you know, as Chris correctly pointed out, it costs very, very little to just, you know, just submit a tend function. Exactly, same for flips as well. Yeah, this is a game changer, and it was a game changer for the old keepers, you know, for obvious reasons, because if you know, if you look at kind of the sweet spot of profitability for a keeper, it's vanishingly thin, right? Let's imagine that you submit an initial bid for, let's say, 1.5% of edge, right? The market only needs to move 0.5% of edge down, right? The price of maker, as in, and one of these bots who never kicks themselves can dime you, you know, obviously you lose your fee. And again, as Chris pointed out, because of the cost of drips, that fee can be very high. If you go back through flaps historically and you look at how much keepers have paid to kick off an auction, I think it varies between something like $20 and $200. I mean, I'm not suggesting for 1 second that $200 is a sensible amount to pay, but that's how much it's been. So of course, if you're losing that much, it's not sustainable, right? So, and likewise, if the market only moves 0.5% the other way, and you're only winning an auction for 1% of edge, again, I think this is something that a lot of people may need clarifying to them. Winning an auction for 1% of edge is not profitable because maker die is a very awkward pair to hedge. It almost certainly involves requires two legs to hedge. You know, maker ETH die being the obvious route, and yeah, there's no way you can reliably do that hedge and give up less than 1% in the process on fees and crossing market spreads, etc. It's just not going to happen. So yeah, well, that essentially is the situation. And so that, in my opinion, is the real reason why these zero bids have started happening, because the value of the beg is now so small, as in, you know, it's the value of winning, that it's all about what is the value of winning that Q spot of being first in, right? That's what the original keepers were all competing for. That's where the high gas prices came from. That's where the drips came from. There is a certain value to being first in. Now, as a result of the size of the beg and the behavior of these bots and the volatility of the market, that value has become zero. It's worthless being first in, which is why all the old, you know, keepers or whoever have either quit the market entirely because they're not incentivized, or they've adopted completely new behavior where they've said, you know what, I'm just going to kick off an auction and place a zero bid because it, you know, at least it costs me hardly anything and I might get lucky. And ironically, literally, I mean, minutes before this call started, the very last flap 521, it was actually me who, I mean, maybe someone's going to hate me for this, maybe someone is sat in this call, but yeah, it was actually me who prevented the guy who kicked it. He was 2 minutes away from you know, taking the whole 10 grand for free, which I believe is by far the closest we've come. So yeah, I just think that my personal opinion is that raising the surplus buffer is very likely not wrong, let's put it that way, but to me, it just seems like postponing the problem, right? So my 2 cents is that if you want to fix the problem, you need to increase the beg. A higher beg will incentivize keepers to submit a sensible offer from the outset, because the Q spot will have value, and you will never have zero bids again because it won't be the right strategy. That's all I got.
Yeah, I think I speak for everyone when I say that's incredibly useful. We basically never have people with experience of keepers coming on these calls. So thank you very much.
Can I ask you a question? So if we were to introduce liquidations 2.0, which is essentially a what was it, a reverse Dutch auction? Yeah, it's a reverse Dutch auction. The cost of capital basically goes to nothing, right? Because you don't actually need to hold any of these tokens, right? You could just buy them at the beginning of your transaction, or flash loan them, what have you. And because the auction instantly settles, right? There's no, you know, capital lockup, right? You're not taking on any price risk, right, on inventory for your bid. Do you think that would go a long way to solving those issues that we're seeing, or am I misunderstanding the problem? Because it's still a race to be first, but you know, if you're first, you win, right?
Yeah, I mean, I can't see how it would be a downgrade. I'll be honest, I would need to kind of study the exact parameters of the Dutch auction. Regarding the capital, obviously that will vary from keeper to keeper. I don't think being capital constrained is a big issue for many of the keepers. I think if you look at their accounts, they will have enough maker to do at least 1 or 2 flaps. So I don't think anyone is flash loaning currently. But no, I mean, I think there's a very simple way of describing what's wrong with the current system, and that is that there are, I mean, yeah, the incentives are asymmetric. The cost of getting in is very high compared to the cost of stealing someone else's auction. So it sounds to me like Dutch auctions would at least be symmetric, in the sense that everyone is on an equal footing. No one has to make that initial sacrifice of kicking. But like I say, I think yeah, equally in the short term. Yeah, until then, I think that for sure. I can't speak with certainty about the Dutch auctions because I don't know exactly what form they would take, but I can say with certainty that a higher beg would fix the problem for now in this format.
Would you say that this is a urgent issue? Like, we currently don't have anything slated, I think, for tomorrow's executive. So like, can this wait to go through the typical governance processes, or is this something that we should consider more urgently than that?
Again, I'll be honest, I'm not really, I'm so new around here. I don't really know what timescales we're talking about. Like when you say regular.
Yeah, so it'd be
governance
this
processes.
Friday, fix it this Friday or next Friday, in your opinion?
Well, I mean, first of all, what sort of parameters would even be considered for the new beg value? I mean, is there a kind of spread that we're willing to discuss, or does it need to be brainstormed kind of from scratch?
I don't know. I'd guess, I mean, right now with a lot of 10,000, that would be anywhere from probably 3 to 5% beg would be a 300 to 500 gain for the keeper if they were the one that won the initial flap.
Yeah.
Or I mean, it could be higher. I don't know. You know, especially if it's incentivizing drips, that's something that I think we'd be willing to pay for. So.
Absolutely. If you incentivize competition, you incentivize drips by definition. That's just how it works. Yeah, I think it's important to distinguish between edge and profit. Obviously, they're two very different things. You know, you can in these sorts of market conditions with gas being this high, you can win for a certain amount of edge, but your profit can be a tiny fraction of that. Yeah, I think I think there's clearly plenty of people in the maker chat, right, who have done that thing of submitting by hand to keep the auctions orderly. So yeah, I think there's no question we could kind of limp through till next Friday for sure. But equally, yeah, I don't think anyone needs explaining it to them why this is the right thing to do as soon as possible, because especially now that the flaps are not they're not quite regular in terms of their kickoff time, because we've got all these one-off events like liquidations for the flips, adding an extra surplus. We've got the PSM contributing extra surplus. I find that it can sometimes create like a premature flap auction that catches people out, and they're not there to watch it, which can lead to someone. But anyway, my point is, I think it's obvious to everyone that this only needs to happen once. And like I say, literally a couple of hours ago, we were 2 minutes away from it happening. This only needs to happen once, and it will, more than outweigh any extra edge given up on a higher beg. So I think that, I think the sooner the better. But at the same time, we're not talking about a systemically dangerous amount of money, whatever happens. So whatever.
So we've raised the flags on this, and everybody can keep an eye on it for the next week, and then maybe that gives us the week to hammer out the exact rates so that we can put it into the following executive.
Yeah, I mean I'll be honest. To me, this is already so much better than I expected. I kind of thought that these problems were like confined to only the people actually dealing directly with the issue, which is why when I went on the chat and I saw Chris just writing word for word the exact problem, I was like, oh wow, this is already a big upgrade on what I was expecting, because someone is having these exact thoughts. So clearly this is already, we're already much further down the road to fixing it than I thought. So either way, this is good.
Great. Yeah, I would want to just say again, thank you so much for your comments. Kind of amused you characterized them as low value earlier, but this is possibly the highest value kind of intervention we've had from someone who's not regularly in the community.
That's very kind. Thank you very much.
All right, so leaving the auctions aside for the time being, is there anything else anyone wants to cover in the next 5 minutes before we wrap up? Primož, did you want to say anything else about the buffer or ETH-B or ETH-A or anything?
Yeah, I had this. Yeah, I wanted to talk about risk in the bull market, which is one of the segments. I'm just not sure. I mean, I can talk briefly about it, like 5 minutes or less.
Yeah, we can maybe run a little long. We're already quite late, so but please do. Go ahead.
Yeah. Yeah. So I just wanted to use today's opportunity to talk a bit about Maker preparing for rainy days, which I guess is not a popular topic during this bull run, but nevertheless, I think I need to address this. So just to briefly simplify what's all about, I can sense there is some sort of community desire to keep increasing debt exposure at Maker because we can finally meet DAI demand. We could fix the peg, get rid of stablecoins in a pretty easy way. We basically got 250 million DAI minted in just one past month from it. So I think it's all very positive, but we need to keep in mind that we can be both aggressively adding new debt to Maker, but not reacting on risk mitigation because the rainy days are coming and we need to be prepared. So what do we actually have on the table to protect Maker? The first protection, of course, Maker capital, which currently seems in a good place, but we know what happens if we have a shortfall event, which means we need to focus on surplus buffer, and currently it stands at 0.3% of DAI debt. The banks usually hold 4% in liquid reserves, and we're far from it. So yeah, I'm not going to go into details here because Chris and Nick talk about it, why it makes sense to increase it. So 10 million would be a good start, although I personally think it should be even higher. So please vote on that poll, and I also think we should increase it as soon as possible, especially because of this flap auction issues that we're having. And then secondly, we also need to think about keeper ecosystem. The liquidations 2.0 are not really close to being released. And we need to get more feedback from keepers because we would ideally want to increase bots, which is the 15 million number, which is at 15 million now. So this is the maximum amount that could be liquidated at once. And it's probably the most limiting parameter for me that when I get concerned about increasing debt exposure at the scale that we're doing it. This is one of the reasons why I am opposed to increasing ETH-B debt ceiling, because 15 million bucks is simply too small to handle multiple liquidations that might happen at various vault types. So if some ETH-B auctions are in queue for some time and they're not picked up and it keeps tanking, we'll have a shortfall very easily, like really soon. The third thing I want to mention is we need to be prepared for increasing rates if we want to maintain this healthy risk profile. So this means that if suddenly we get to 1 billion debt ceiling for it, 1 million debt exposure, actually, that's quite possible. You never know. We may need to go much higher with stability fee from the currently one that we proposed, and that's 3.5. And this could cause problems because we knew what happened with 5 a vault, where we increased rate because we wanted to hedge the exposure, but we did a lot more damage, right? Because many of the users left that otherwise wouldn't. So this sometimes means that it could be wiser to simply limit risk exposure, so the debt exposure, by having fully utilized debt, although I know this won't be popular, but there is another risk mitigation technique that combines this limiting of debt exposure, which is to alternatively also start introducing higher liquidation ratio vaults with lower rates. And if we still see this crazy demand for leveraging, this could protect us better. Yeah, so that's basically to try to be quick. I'm not gonna preach about it here, but yeah, I just may wanted to simply lower a bit the risk appetite at this point. Maybe only prepare community that we should be a bit more cautious when it comes to debt ceiling increases during these times. And when we actually increase it, we always need to ask ourselves if we're also equally aggressively mitigating risks by making some of these hedging decisions that I described. So yeah, that's basically all from my side.
One thing I want to add is for those concerned about turning off the burner altogether, it's possible we can sort of raise the surplus buffer a little bit at a time using the LERP module so that we don't turn the burner off altogether, but we can work towards hitting our target debt ceiling, or sorry, a surplus buffer.
Yeah, I think in a bull market, the buy side from the burner isn't even that significant either. Like I really don't think it'll have any effect on the MKR price.
Unless MGAR price is super cheap right now, Nick.
Yeah, that boom only set us back to like Saturday in ETH terms. So you're looking at the wrong price.
All right. Does anybody else have any comments they want to make? Just really feels like things are slowing down a little. So if not, we can probably wrap up. All right. Looks like no one's got anything desperately that they desperately want to say. So I think we'll end the recording there. As we've done previously, I'll leave the call open if anybody wants to continue discussing things afterwards. But yeah, thank you everyone for coming, and I will talk to you all next week, I'm sure. Thanks.
Have a fine Thursday, everybody.